3 months ago, I watched a trader with 5 years of experience blow through their entire account in a single afternoon. Not because they didn't know technical analysis, not because they couldn't read charts, but because in one moment of fear, they abandoned everything they knew. Here's what haunts me about that day. It wasn't the first time they'd done it, and it probably won't be the last. Why? Because they never addressed the real problem. The one thing that separates traders who survive from those who don't isn't their strategy, it's their psychology. Today, I'm sharing a systematic approach that's transformed my own trading and the trading of countless others I've mentored. It's called the 90-day trading psychology strategy. And if you commit to it fully, it will fundamentally change how you operate in the markets. Stay with me, because by the end of this video, you'll understand exactly why most traders fail and what you need to do differently. Chapter 1. The Invisible Enemy. Let me start with a hard truth from my years in the markets. Your strategy isn't your problem. Your indicators aren't holding you back. The market isn't rigged against you. The real enemy is invisible. It's the voice in your head that whispers, just one more trade when you've hit your daily limit. It's the knot in your stomach that makes you close a winning position too early. It's the rush of adrenaline that convinces you to double your position size after a loss. I'm talking about your emotions, and they're sabotaging your trading every single day. Let me paint you a picture. You've spent hours analyzing the perfect setup. Your entry is clean. Your stop loss is placed exactly where it should be. Everything aligns with your plan. Then the trade moves against you by just a few pips, and suddenly logic disappears. That's fear taking the wheel. Or consider this scenario. You're up significantly on a position. Your target is clear, but the market keeps climbing. That little voice starts negotiating with you. Why settle for your target when you could have more? Just hold a bit longer. That's greed, and it's just as dangerous. These two emotions, fear and greed, operate like twin thieves. They work in the shadows, stealing your capital, one impulsive decision at a time. And here's what makes them so deadly. They make you believe you're still in control. You're not trading anymore, you're gambling. And gambling always ends the same way. I learned this lesson the hard way. Early in my career, I had a strategy with a proven edge. My backtesting showed consistent profitability. But in live trading, I couldn't replicate those results. Month after month, I watched my account swing wildly, never building any real momentum. The breakthrough came when I started tracking something different. Not just my trades, but my mental state during those trades. What I discovered shocked me. Every significant loss came from the same pattern. I would deviate from my plan at the exact moment when emotional pressure peaked. The market wasn't beating me. I was beating myself. That's when I developed the framework I'm sharing with you today. The 90-day trading psychology strategy isn't about finding better setups or optimizing your indicators. It's about training your mind to stay steady when everything around you is chaos. Think about professional athletes for a moment. They don't just practice their sport. They work extensively with sports psychologists because they understand something crucial. Physical skill means nothing if your mind crumbles under pressure. Trading is no different. You can have the technical skills of a master chartist, but without psychological discipline, those skills are worthless. The first pillar of this 90-day transformation is learning to recognize when emotions are influencing your decisions. Not after the fact, when your account is smaller, but in real time, when you can still do something about it. This is where your trading journal becomes your most valuable asset. And I'm not talking about a simple log of entries and exits. I'm talking about a psychological mirror that reflects exactly what's happening inside your mind. After every single trade, winning or losing, you must document your emotional state. Were you anxious, overconfident, impatient? Did you take that trade because it genuinely met your criteria? Or because you felt like you were missing out? I know what you're thinking. This sounds tedious. You want to focus on the excitement of trading, not writing essays about your feelings. But here's the reality. Professional traders do this. The ones making consistent profits year after year. They all maintain detailed journals. Why? Because patterns emerge. You'll start noticing that every time you feel a certain way, you make a certain type of mistake. Maybe when you're feeling impatient, You enter positions prematurely. Maybe when you're riding high on a winning streak, you start taking lower quality setups because you feel invincible. These insights are gold. You cannot fix a problem you can't identify. The journal forces you to identify your problems with brutal clarity. But awareness alone isn't enough. You need a system to override emotional impulses when they arise. That's where your trading plan becomes your anchor. A comprehensive trading plan isn't just a list of entry and exit criteria. It's a complete framework that tells you exactly what to do in every scenario. When fear screams at you to exit, your plan calmly reminds you of your rules. When greed tempts you to over-leverage, your plan pulls you back to your risk parameters. Without this structure, every market movement feels personal. You take it as validation or rejection. With a solid plan, market movements become data points. Nothing more, nothing less. Now, even with a journal and a plan, you need one more critical skill: the ability to pause before you act. This is where mindfulness enters the picture. Don't worry, I'm not suggesting you need to meditate for hours or chant mantras. Mindfulness in trading simply means creating a gap between stimulus and response. The market spikes. Your heart races. Your finger hovers over the close button. In that moment, mindfulness gives you one precious second to ask yourself, am I following my plan right now? Or am I reacting to fear? That 1 second changes everything. Over these 90 days, your mission is clear. You're not trying to eliminate emotions. That's impossible. You're learning to observe them, acknowledge them, and then consciously choose not to let them drive your decisions. Chapter 2, Building Unshakable Belief. Let's talk about confidence, because most traders completely misunderstand what it means. Confidence in trading isn't about believing you'll win every trade. That's not confidence, that's delusion. Real confidence is something deeper. It's an unshakable trust that your process will work over time, even when individual trades fail. Think about that distinction. Most traders tie their confidence to their last few trades. They have a couple of winners, and suddenly they're invincible. Then a few losers hit and they question everything. Their confidence swings wildly based on short-term results. This is exhausting and completely unsustainable. Professional confidence is different. It's built on evidence, not hope. It's based on knowing, not guessing. And that knowledge comes from one essential practice: proper backtesting. Backtesting is how you interview your strategy before you risk real capital on it. You take your rules, your exact entry and exit criteria, and you test them against historical data. Not just a few weeks, but months or even years of market conditions. You want to see how your strategy performs during trending markets and choppy ranges, how it handles high volatility and quiet periods, what the drawdowns look like, what the win rate actually is. When you do this properly, something fundamental shifts inside you. You move from hoping your strategy works to knowing it works. You've seen the evidence with your own eyes. This changes how you feel during live trades. Instead of thinking, I hope this works, you're thinking, I've tested this across hundreds of scenarios. I know my edge exists. I just need to execute. That's the mindset that keeps you calm when others panic. But backtesting is just the foundation. The real confidence building happens through daily trade reviews. Every day after the market closes, you need to review every trade you took. Not just whether you won or lost, but whether you executed correctly. Did you follow your rules? Did emotions influence your decisions? What could you have improved? This daily practice serves two critical purposes. First, it reinforces your trust in your system. You start seeing patterns. Maybe your best trades happen during specific market conditions. Maybe your worst trades consistently occur when you violate your own rules. Second, it creates a personal library of lessons. Every trade becomes a data point in your ongoing education. Over 90 days, you'll accumulate an enormous amount of self-knowledge that's uniquely yours. Your journal becomes more than just a record. It becomes a confidence log. When doubt creeps in, and it will, you can go back and review all the evidence. You can remind yourself of the times you followed your plan and succeeded. You can see how consistency pays off over time. Here's where most traders make a critical mistake. They measure their worth solely by their profit and loss. A green day means they're talented. A red day means they're failures. This is a disaster for your psychology. Instead, you need to measure yourself by process, not outcome. Did you follow your setup criteria? Did you stick to your risk management rules? Did you avoid revenge trading after a loss? When your confidence is built on process rather than results, losses stop shaking your foundation. You understand that a perfectly executed trade can still lose money. That's just the nature of probability. What matters is that over time, following your process leads to profitability. This perspective is liberating. It removes the emotional roller coaster of attaching your self-worth to every trade. You become steady, reliable, professional. Confidence built this way has another powerful effect. It eliminates your worst enemies. FOMO and self-doubt simply fade away. When you genuinely believe in your edge, you don't feel compelled to chase every market move. You know your setup will appear again. You can wait patiently, and when you do take a loss, you don't question your entire approach. You simply log it as part of the statistical journey. This is the mindset of a professional. You're not hoping for success. You're not desperate for wins. You're simply showing up each day, executing your plan, and letting probability work in your favor. Over the next 90 days, I want you to commit to specific actions. Backtest your strategy on at least 6 to 12 months of data. Review every trade daily, focusing on your decision-making process. Document both your successes and failures in detail. And most importantly, measure your success by discipline, not just profits. If you do this consistently, something remarkable happens. You stop searching for the perfect indicator or the magic setup. You realize your edge was always there. It just needed your belief to bring it to life. Chapter 3, the backbone of success. Now we come to the backbone of everything. The element that determines whether you'll still be trading 5 years from now or whether you'll be another statistic. I'm talking about discipline and consistency. You can have all the confidence in the world. You can have perfect emotional awareness, but without discipline to execute your plan day after day, none of it matters. Discipline in trading isn't about being rigid for the sake of rules. It's about creating structure that protects you from your own worst impulses. Let me tell you what discipline looks like in practice. It means setting specific trading hours and sticking to them. Not sitting glued to your screen all day, jumping at every small movement. Not revenge trading at midnight because you're frustrated with your earlier losses. It means following your risk management rules every single time without exception. Not telling yourself just this once. When you want to increase your position size, not moving your stop loss because you don't want to accept the loss. It means avoiding overtrading, even when the temptation is overwhelming, especially when the temptation is overwhelming. These small, consistent actions are what separate amateurs from professionals. And here's the thing about discipline. It's not glamorous. It's not exciting. It's showing up every day and doing what needs to be done, whether you feel like it or not. Now, let's address consistency, because it's often misunderstood. Consistency doesn't mean making profits every single day. That's not realistic, and it's not what professional traders achieve. Consistency means showing up with the same focus and process every time you trade. Think about elite athletes. They don't train intensely only when they feel motivated. They show up in the rain, in the cold, when they're tired, when they'd rather be anywhere else. They put in the work regardless of their feelings. That's the mindset we need as traders. The market rewards consistent execution over time, not random bursts of effort when we're feeling inspired. The most effective tool for maintaining this discipline is your daily journal. It holds you accountable. Every day, you're forced to answer simple but powerful questions. Did I follow my plan today? Did I stick to my risk rules? Did I overtrade? Why did I take each trade? Writing these answers down forces you to confront the truth. You can't lie to yourself when it's written in black and white. And over time, patterns emerge in your behavior. Maybe you notice you break rules when you're tired. Maybe you overtrade after big wins because you feel invincible. Maybe you take lower quality setups on Friday afternoons when you're ready for the weekend. These patterns are warning signs. They show you exactly where you need to strengthen your discipline. Here's something important to understand. Discipline doesn't mean perfection. You will slip up. Every trader does. But when you have a consistent routine, those slip-ups become rare. And when they do happen, you recover quickly. Without a routine, one bad decision spirals into a day of mistakes, then a week. Then you're trying to dig yourself out of a hole that didn't need to exist. The real power of discipline and consistency reveals itself in your mental state. When you stick to your process, you feel stable even when the market is chaotic. The ups and downs don't shake you as much because you understand your job. Your job isn't to win every trade, it's to execute your plan without deviation. This mental toughness protects you from chasing quick wins. It protects you from jumping into random setups just because you're bored or feeling desperate. Instead, you learn to wait. You wait patiently for your specific edge to appear, and when it does, you take the trade with full confidence. Not because you're hoping it works, but because it meets your criteria. I can tell you from personal experience, discipline was the turning point in my own journey to consistent profitability. In my early years, I made every mistake in the book. I broke my rules regularly, I overtraded, I let emotions drive my decisions. I knew what I should do, but I didn't do it consistently. Everything changed when I committed to a strict routine. I set trading hours and stuck to them religiously. I followed my risk rules without exception. I journaled every single day, even when I didn't want to. And something shifted. Trading became less stressful. The results became more predictable. And slowly but surely, my account started growing consistently. That's the power of discipline. It transforms trading from an emotional gamble into a professional operation. Over the next 90 days, here's your roadmap. Create a structured routine that includes trading hours, preparation time, review time, and importantly, downtime away from the markets. Stick to your risk management rules without exception, no matter how tempting it is to bend them. Journal every single day, even on days when you don't trade. And track your consistency weekly, measuring how often you followed your plan. Remember this truth. The market doesn't reward big trades. It rewards the right trades executed consistently over time. And the only way to achieve that is through discipline. Discipline protects you from impulsive actions. Consistency turns good habits into reflexes. Together, they create a trader who can survive the inevitable storms, weather the drawdowns, and keep growing year after year. Chapter 4, Summary. So, here we are. You now understand the 3 pillars of the 90-day trading psychology strategy. Emotional control to stop fear and greed from sabotaging your decisions. Confidence built on evidence and trust in your process. Discipline and consistency to execute your plan day after day, regardless of how you feel. But I want to share something with you now. Something I wish someone had told me when I was starting out. This 90-day journey isn't really about becoming a better trader. Not entirely. It's about becoming a better version of yourself. It's about developing mental strength that extends far beyond the markets. The patience you build waiting for your setups translates into patience in life. The discipline you develop following your plan shows up in every area of your life. The emotional control you master in volatile markets helps you stay calm during any crisis. I've worked with traders from all walks of life. Some of them came to trading after successful careers in other fields. Others were young and hungry, looking to build their first real success. What I've noticed is this. The ones who commit to developing their trading psychology don't just become better traders. They become better decision makers, better partners, better parents, better humans. Because here's the secret. Trading is a mirror. It reflects every flaw, every weakness, every unresolved issue you carry. You can't hide from yourself in the markets. Your impatience shows up. Your need for validation appears. Your fear of failure becomes obvious. But here's the beautiful part. The markets also give you the opportunity to heal those things, to grow beyond them, to become someone who acts from strength rather than reacting from fear. That's what these 90 days offer you. It's not a quick fix. It's not a magic formula. It's a transformation. I won't lie to you. Some days will be hard. You'll want to skip your journaling because you're tired. You'll be tempted to break your rules because you see an opportunity you don't want to miss. You'll have days where you question whether any of this is worth it. Those are the days that matter most. Those are the days that separate the traders who make it from the ones who don't. Because success in trading, real success, isn't about the days when everything goes right. It's about what you do on the days when everything feels wrong. Do you stick to your process when every instinct tells you to abandon it? Do you follow your plan when your emotions are screaming at you? Do you show up tomorrow after today felt like a disaster? That's where the real work happens. That's where you build the foundation for long-term success. I started this video by telling you about a trader who blew up their account. I want to tell you the rest of that story. 6 months after that devastating loss, they came to me. They were broken, financially and emotionally. They were ready to quit trading entirely. But something in them, some small spark, still believed it was possible. We worked together on this exact 90-day strategy, not on new indicators, not on finding a better system. We worked on their psychology. The first month was brutal. They struggled with the journaling. They broke their rules repeatedly. Old habits don't die easily, but they kept showing up. Every day they did the work. The second month, something started to shift. They began catching themselves before making emotional decisions. Their journal revealed patterns they'd never noticed before. They started trusting their process instead of hoping for miracles. By the third month, they weren't just following their plan. They had internalized it. It had become part of who they were. Their trades became boring in the best possible way. Consistent, methodical, professional. Today, they're profitable. Not because they found some secret strategy, but because they transformed themselves from someone who couldn't control their emotions into someone who trades with discipline, confidence, and calm. That transformation is available to you too, right now. Starting today, you don't need to be perfect. You don't need to have it all figured out. You just need to commit to the next 90 days, to showing up every single day and doing the work. Start your journal tonight. Write down what you learned today, even if you didn't trade. Review your trading plan and make sure it's complete. Set your schedule for tomorrow and commit to following it. Small actions repeated consistently create massive change. The trader you want to become, the one who stays calm during volatility, who trusts their process, who executes with discipline, that person is built one day at a time, one decision at a time, one trade at a time. And here's what I know from years of experience. If you commit to this journey, 3 months from now, you'll look back amazed at how much you've changed. Not just your trading results, but your entire relationship with the markets and with yourself. You'll stop being afraid of the markets. You'll stop hoping and start knowing. You'll stop gambling and start executing. And then that's the promise of the 90-day trading psychology strategy. Not overnight success, but sustainable transformation. So I'm asking you to make a decision right now. Are you ready to do the work? Are you ready to face yourself honestly, to challenge your habits, to build something real? If your answer is yes, then welcome to the journey. I'm honored to be part of it with you. Start today, not tomorrow. Today. Because every day you delay is another day you're leaving money on the table and potential unrealized. The markets will still be here in 90 days. The question is, will you still be trading, or will you have transformed into the trader you were always meant to become? I believe in you. Now it's time for you to believe in yourself. Thank you for watching. I'll see you in the next video, where we'll dive deeper into specific journaling techniques that will accelerate your progress. Until then, stay disciplined, stay consistent, and remember, the greatest trade you'll ever make is the investment in yourself.